Let's talk about the new RBI norms for the MFI sector in terms of new laws and in terms of regulations. How will things change? Padmaja Reddy, founder and managing director of Spandana Sphoorty Financial, joins us. Good morning. Thank you for joining us. Now, according to you, how positive are the latest steps taken by Reserve Bank of India in the policy meeting, and how will this impact your profitability? Do you think this will change the way how you've been lending in the past?
This is very useful. In a macro perspective, one, RBI has further reduced the repo rate. There has been drop of 25 basis points, which has reduced further to 25. Now the repo rate is 5.1%. And again, RBI has further suggested that they will maintain further reduction in the next quarter. I think the terminal repo rate is going to be 4.9%. So we have already seen the impact, the transmission in terms of the rates further coming down. So we were able to raise funding at a lower rate compared to the previous quarter. So I'm sure that this will have very good impact in terms of our cost of fund going down big time. And again, the flow of funds have big time increased. I don't know how many banks we were to say no. We had more than sufficient funds that we have raised for the next quarter. So last quarter and that we already closed with 750 crore surplus funding. So it was a great news. And specific to microfinance, so after our request, particularly the request going from MFIN, the industry body, the RBI has increased the indebtedness cap at the borrower level from 1 lakh to 1,25,000, which is very good. So this will further improve the financial inclusion. So this request has been coming from our borrowers. The borrowers have been requesting us, saying that the 1 lakh, which was decided by RBI way back in 2010, and after that we all know that the inflation has big time increased year on year. But somehow this 1 lakh, of course, initially in 2010 it was decided at 60,000. Subsequently in 2014 it was increased to 1 lakh. But again, after that there was no further revision. But again, our borrowers have been requesting us, saying that this 1 lakh is not sufficient, and we are giving this 1 lakh loan for 2 years, which means at the household level per annum they are getting only 50,000. And again, it's not just our borrowers are utilizing this loan amount. This is going for the entire household. So the borrower, her spouse, and also her son and a daughter, the entire household level. So this is not just sufficient. So whenever we meet our borrowers, what additional thing that you are asking us, so it's always the loan amount that is coming from the MFIs, it is not sufficient. They have been asking for further revision in the loan amount. So we have been requesting RBI to increase the indebtedness cap, which was there at 1 lakh. So finally RBI has considered. Now they have increased the indebtedness cap from 1 lakh to 1.25 lakh. This helps us to increase the loan size from 1 lakh to 1.25 lakh, which means the average loan size can be increased by 25,000. So without increasing the number of borrowers, so our loan outstanding can increase by 25%. So this will impact our portfolio, and this will increase our profitability to the extent of 25%. This is a great thing. And again, one more thing that RBI had changed is the income level.
Padmaja, hi there, morning. Tell us a little bit about the market share that you're eyeing in the MFI loans. SFBs and banks, they still command a solid 70% of the MFI loans. Do you see this shifting more in favor of NBFCs?
And earlier, looking at the market share of NBFC MFIs within the overall market pie, so we were able to restrict ourselves only to the poorest of the poor, because there was an income level cap So we were able to reach out only to the segment whose annual household income was just below 1 lakh. Today, the RBI has increased the income level as well. So this has been increased in case of rural to 1.6 lakh. So from 1 lakh to 1.6 level, it's a big increase. So which means like we can increase the market pie. So we can reach out to more and more households in the rural area. And when it comes to urban, we can reach out to households whose annual household income is up to 2 lakhs. So like we can reach out to some of the households who are eyeing by the NBFCs. So which means like today the market share of NBFC MFIs can big time increase. So one, like our market share will increase. Two, like we can give higher loan sizes to our existing borrowers, by which like our overall market share within the segment can further increase.
Also, Padmaja, the economy has been facing a severe slowdown.
And again, like it will have triple.
Sure, go ahead, please.
Yeah. So as you said, like the economy is facing slowdown. But again, looking at our particular segment, so fortunately, so we have very good monsoons this year. So if you look at like who our borrowers are, so particularly like 98% of our borrowers are from rural areas and they have dependency on agriculture. So 98% of our borrowers, they are from rural areas. They live upon agriculture. They work as agriculture laborers. So they have dairy as secondary source of income. And this year the monsoon has done very well and they are very, very happy. They are getting very good livelihood opportunities. So they work as daily wage laborers and all their income sources, they work as wage laborers. Their spouses work as masonry laborers and their sons like they work as drivers, and again like their daughters they work as maids. So as far and again this particular segment, like if you look at, so they have very diversified sources of income. So they don't have single source of income. And if you look at like who we employ them as our drivers, we employ them as our maids, and we employ them as our agriculture laborers in our farms. And if you look at like whatever the slowdown that has happened, we have not given up like our maids, we have not given up our drivers, we have not given up our plumbers, we have not given up our carpenters. So whatever the slowdown like we have seen in terms of discretionary things, but we have not really seen any sort of slowdown in terms of our borrowers where they are engaged in. So there is absolutely no slowdown in terms of credit intake by our borrowers. There has been some slowdown in September that we have seen. That's because of floods and also heavy rains. But that's again like only for 15 to 20 days. So that has resumed again in the month of October because of floods and heavy rains. These women and again like their family members, so they were in relief camps for a week or 10 days. So it was a temporary glitch, like whatever the portfolio that got impacted. So but again like after 15 days like they started repaying their loans, and in fact like that has increased our credit inflow. So in terms of resuming business, in terms of repairing their houses, so there was an extra credit requirement. And again whatever that RBI has taken stand in terms of reducing the repo rate, that has reduced our cost of borrowing, and again RBI increasing the overall indebtedness, that has increased our loan size, that has increased our overall portfolio, and that has further increased our net interest margin. And all these stands that RBI has taken, all these decisions that has taken ultimately has very good positive impact on our profitability and on our overall portfolio quality and also the market share.
Sure. All right. Appreciate you taking the time out. Thanks very much for joining in and sharing with us the outlook for the sector.